Hey everyone, and welcome to our deep dive all about NIO.
An electric vehicle company that's been through quite a journey.
Oh yeah, they've had their ups and downs,
From soaring high in the stock market.
to facing some pretty serious questions about their future.
But here's the thing, they might just be making a big comeback this year in 2024.
And to guide us through this fascinating story,
We've got Sheila Wang,
a senior equity analyst.
who specializes in Chinese assets.
Sheila's insights suggest that
NIO is making some
really smart moves.
that could pay off big time.
So in this deep dive,
We'll be digging into their financials.
their strategic shifts,
And even how
the global economy.
is playing a role in their comeback story.
Have you ever doubted a company or an investment?
Only to see it bounce back stronger than ever.
Well, NIO's story might just surprise you.
Now, one of the things that makes NIO's journey so interesting is how it mirrors.
What many of us experience with our own investments.
We see things plummet,
We have doubt.
but then bam, sometimes those investments come back swinging. And NIO's stock definitely took a hit, going from $62 per share in 2021 to just $3 this year.
Ouch. That's gotta hurt.
Yeah, it's a reminder that stock prices don't always tell the whole story.
In NIO's case, they were dealing with some persistent losses,
Meaning they were spending more money than they were making.
Exactly. They were investing heavily in things like,
Research, marketing, and even building out that charging station network.
which is all important, but it was costing them a lot of money.
So they were burning through cash, hoping to gain traction in the market.
But then their Q2 2024 report came out, and it kind of threw everyone a curveball,
Yeah, their revenue actually surged, particularly in that quarter.
and their losses started to shrink.
So what happened?
Well, investors started to see that NIO was adapting and making changes.
They were course correcting.
Exactly, and that gave investors confidence.
Confidence that NIO might actually have a path to profitability.
And that's a big deal in the investment world,
So let's talk about some of those changes.
because they're pretty fascinating.
One of the big moves NIO made was introducing this thing called battery as a service back in March 2024.
BOSS for short.
BOSS, basically, it's like renting your car's battery instead of buying it outright,
And they also made those rentals much cheaper.
which made the upfront cost of buying an NIO more appealing.
And it addressed a big concern for potential EV buyers:
Which is,
the high cost of replacing a battery down the line.
it's a smart move for sure.
And it really paid off. Their sales jumped to 20,000 units a month with a rolling average of 16,000.
So it wasn't just a one-time bump, it was sustained growth.
And those thin profit margins we talked about earlier, well, those started to look a lot healthier too.
So they were making more money on each car they sold.
Exactly. Their gross margin for vehicle sales reached 12.2% in Q2.
That's a big improvement.
Plus, they're projecting to deliver between 61,000 and 63,000 vehicles in Q3.
Wow, they're feeling confident.
It seems like they've found their stride.
And they're not stopping there. They also launched a second brand called Ladao in May,
Ladao is specifically targeting families.
which is a smart move because NIO initially focused on the premium market.
But to really thrive in the EV market, you need to appeal to a wider audience.
And Ladao's first model, the L6, is priced very competitively at 206,900 yuan.
With rental options to make it even more affordable.
So they're not just offering a luxury experience anymore.
They're providing practical solutions for everyday drivers.
It's a smart diversification strategy.
They want to have cars for everyone.
From budget-conscious buyers to those who want all the bells and whistles.
It's like having a car for every stage of your life.
And get this, Ladao is launching a 6 to 7 seat SUV next year.
And NIO is working on a third brand that will target the entry-level market
They're covering all their bases.
by offering a range of vehicles across different price points.
NIO is creating a more stable foundation for growth.
It's like a diversified investment portfolio.
You're less vulnerable to fluctuations in any one market segment.
Exactly. It's a smart way to manage risk.
But NIO's comeback wasn't just about internal changes.
They also got some major external support.
Oh, yeah. This is where things get really interesting.
NIO China secured a strategic investment agreement with 3 of its existing shareholders.
And we're talking serious cash here, a 3.3 billion yuan infusion.
Plus, NIO themselves committed to investing an additional 10 billion.
That's a massive vote of confidence.
And here's why it matters in China. Having state-backed investors is a big deal.
It's like having the government on your side.
It opens doors to resources, connections, and potentially favorable policies.
So NIO's not just playing the game, they're playing it with some powerful allies.
And it's not just domestic support. They also have this Strategic partnership with CYVN.
CYVN is an investor who poured a cool $738.5 million into NIO last year.
And this partnership goes beyond just money.
It's about strategic collaboration,
They're setting up a cutting-edge tech R&D center in Abu Dhabi.
focusing on smart driving and AI technology.
This partnership will expand NIO's global R&D footprint
It'll enhance their innovation capabilities.
and help them cater to the growing demand for smart EVs in the Middle East and North Africa.
So they're thinking globally.
They're not content with just being a Chinese success story.
They want to be a global force in the EV market.
Now, on top of all that, we can't ignore the global forces at play here, especially the financial dance between the U.S. and China.
It's a complex situation with those two economic giants kind of engaged in a financial tug-of-war.
The U.S. interest rate hikes over the past few years have attracted global capital,
But they've also put pressure on economies like China.
leading to a decline in asset prices.
Now the U.S. is facing a dilemma
Lowering interest rates could boost China's economy,
and help their assets recover.
but it could also strain the U.S. because of its massive debt.
So what does this all mean for NIO?
Well, a U.S. rate cut could actually be good news for them,
It could create a more favorable environment for Chinese assets.
including NIO,
And we're already seeing the Chinese government stepping in with economic stimulus measures.
to boost their economy.
And here's where it gets interesting for NIO. They're participating in a government subsidy program.
That could provide them with up to 600 million yuan in financial support.
It's like a cherry on top of their already impressive comeback Sunday.
This subsidy program, combined with all the other positive developments we've discussed,
Paints a pretty optimistic picture for NIO's future sales growth.
they're in a prime position to capitalize on these trends.
So to recap, NIO has made some smart operational adjustments.
They've got strong external support.
And even the macroeconomic winds seem to be blowing in their favor.
It's an incredible turnaround story.
And we've only just scratched the surface.
In the next part of our deep dive,
We'll dig into their long-term strategy
the competition they face,
and the potential challenges that lie ahead.
we'll examine if NIO is truly a game changer or just another player.
In a rapidly evolving industry,
So stay tuned, we're just getting started.
welcome back to our deep dive on NIO,
When we left off, we were talking about how the global economy,
especially that U.S.-China relationship could really impact NIO's future.
it's a delicate dance, isn't it?
Kind of a financial seesaw.
When one side goes up, the other tends to dip a bit, and China has been making some strategic moves to kind of boost their own economy.
Especially in the auto sector.
Right.
And NIO is right in the sweet spot there.
They're benefiting from that government subsidy program we talked about.
Yeah, that could pump up to 600 million yuan into their operations.
It's a nice little boost, but it's not just about those short-term gains either.
Right.
These government initiatives signal a long-term commitment to sustainable development.
And to reducing those carbon emissions.
Exactly.
So NIO is riding this wave of financial incentives.
And a policy environment that's really pushing them forward.
They're playing their cards, right?
They are, but let's not forget they're not alone in this race.
The EV market is getting crowded.
Oh yeah, both in China and globally.
It's a high-stakes game.
With those established giants like Tesla,
vying for dominance.
along with a whole bunch of ambitious Chinese startups nipping at their heels.
It's getting competitive out there.
Each player brings something different to the table.
Tesla has that global brand recognition,
And a loyal following.
while companies like BYD, they've mastered that cost competitiveness.
And they really understand the nuances of the Chinese market.
So for NIO to stay ahead
They need to constantly innovate.
and offer something unique,
And one area where they've shined is their approach to battery technology.
and that whole charging infrastructure puzzle.
Right. Their battery as a service model, or BOS,
Yeah.
is pretty innovative.
We talked about it earlier. It's like renting your battery instead of buying it.
It takes away that range anxiety and makes EV ownership much more appealing.
To people who might have been on the fence before.
Absolutely. It's been a key driver of their recent sales surge.
So that's working out well for them.
It is.
Yeah.
But here's a question to consider. Can they scale up their battery swapping infrastructure fast enough to keep up with that growth?
That's a good point.
And what about those rapid advancements in battery tech happening all the time?
Yeah, what's cutting edge today could be obsolete tomorrow.
Exactly. NIO can't afford to fall behind in that race.
So they got to stay on top of their game.
Absolutely. And there's another hurdle they're facing, navigating the world of geopolitics.
Ah, yes, those U.S.-China trade tensions.
They add a layer of uncertainty for any business operating in both countries.
We've seen how tariffs and sanctions can really disrupt things.
Disrupting supply chains.
And impacting profits.
NIO needs to manage their global operations strategically to kind of mitigate those risks.
For sure.
And remember, they're also expanding into new territories,
Like the Middle East and North Africa?
which come with their own set of opportunities and challenges.
It's a balancing act.
They need to stay focused on their core markets.
While also looking for growth in new regions.
So while 2024 has been a year of progress for NIO,
Their journey is far from over.
they've got some serious challenges ahead.
If they want to achieve lasting success.
And it's not just about those external factors either.
What do you mean?
They need to be laser focused on their internal operations as well,
Streamlining processes
optimizing costs.
and pushing the boundaries of innovation.
Exactly. Attracting and retaining top talent is crucial too.
Yeah, the EV industry is a battleground for the best engineers, designers, and software developers.
It's a talent war out there.
But let's not overlook one of NIO's biggest assets,
What's that?
their loyal customer base.
Oh, absolutely. They've cultivated a real community around their brand.
It's more than just buying and selling cars.
Their customers are like brand ambassadors,
Spreading the word.
advocating for NIO's values.
That's invaluable
That kind of loyalty is hard to earn.
and easy to lose.
Exactly. Any slip-ups in product quality, customer service,
Or ethical conduct could damage that trust.
faster than you can say electric car.
So NIO's at a crossroads.
They've shown resilience, adaptability, and a hunger for innovation,
But the road ahead is likely to be bumpy.
with twists and turns that will test them,
It'll be fascinating to see how they navigate these challenges
and if they can achieve their vision.
of becoming a global leader in the EV space.
What I find really interesting is how NIO's story mirrors the larger trends happening in the automotive world.
Like what?
That shift towards electrification, China's rise as an automotive powerhouse.
And the growing importance of technology and software.
It's all converging.
It's like NIO is a microcosm of this global transformation.
A case study in disruption and reinvention.
Their success or failure.
Has implications for the entire EV ecosystem,
It's a story that's still unfolding.
full of suspense and intrigue.
Okay, so let's shift gears a bit and talk about what all this means for investors.
All right, let's talk money.
This is where it gets real for a lot of our listeners.
From an investor's perspective, NIO presents a mix of opportunity and risk.
On the one hand, they've got that recent turnaround, their growth trajectory, and that supportive macroeconomic environment we talked about,
All those make them a pretty tempting prospect.
especially with all the buzz around EVs.
And that growing demand for sustainable transportation.
It's like investing in the future.
But on the flip side, the EV market is still in its early stages.
There's a lot of uncertainty, a lot of moving parts.
The competition is fierce. Technology is evolving rapidly, and government policies can change quickly.
It's a high-stakes game.
And investors need to carefully weigh those potential rewards against the risks.
So it's not just about checking the stock ticker.
It's about understanding the fundamentals of their business, the competitive landscape, and their long-term growth potential.
And it's about having a clear investment strategy.
And knowing your own risk tolerance.
NIO is a high-growth, high-volatility stock.
It's not for the faint of heart.
Definitely not for those who can't handle a little roller coaster ride.
But for those who are willing to ride those waves to weather the storms, NIO could offer some pretty sweet returns down the line.
I think the key takeaway here is that investing in NIO, or any EV company for that matter, requires doing your homework
Understanding the risks.
and having a long-term perspective.
It's not a get-rich-quick scheme,
It's about investing in companies that are shaping the future of transportation.
and being part of a global movement towards a more sustainable and innovative world.
Now, before we wrap up this part of our deep dive.
Let's zoom out a bit and consider the bigger picture.
Okay.
What does NIO's journey tell us about the future of cars?
And how will it impact traditional automakers, tech giants, and of course, drivers like you and me?
NIO's rise is a clear sign that the old guard of the automotive industry is facing a serious challenge.
The reign of gasoline-powered cars is coming to an end.
Electric vehicles are going mainstream.
And this shift is being fueled by a convergence of factors.
Concerns about climate change advancements in battery technology, government incentives, and changing consumer preferences.
It's a recipe for disruption.
Traditional automakers are scrambling to catch up.
They're pouring billions into developing their own EV models.
And building that charging infrastructure we talked about.
But they're facing fierce competition from these nimble startups like NIO.
Who aren't weighed down by those legacy systems and can move much faster.
And it's not just about building cars anymore.
It's about creating an entire ecosystem.
That includes everything from charging and connectivity to self-driving features and software.
That makes the whole driving experience smarter and more enjoyable.
The car is becoming a connected device.
An extension of our digital lives.
And companies like NIO are at the forefront of this revolution.
blurring the lines between the automotive and tech worlds.
They're not just car manufacturers anymore.
They're technology companies, software developers, data analysts, the whole shebang.
And this fusion is creating some exciting new opportunities for innovation.
For drivers, this means more choices, more features, and a more seamless and personalized experience behind the wheel.
Sounds pretty cool.
It does, but it also raises new questions about things like data privacy, cybersecurity, and the ethical considerations of autonomous driving.
That's a lot to think about.
It's a brave new world out there, full of both promise and potential pitfalls.
And NIO is one of the companies leading the charge into this uncharted territory.
Their story is a fascinating case study in innovation disruption and the transformative power of technology.
It's far from over.
The next chapter is still being written.
Buckle up and enjoy the ride. The future of mobility is here.
And it's electric.
All right, so we've talked a lot about NIO's comeback story.
From their financial ups and downs to their smart strategic moves.
They seem to be in a pretty good position now.
Oh, definitely. But the question is, can they keep this momentum going?
Can they keep it up?
That's the big question, isn't it? They've got a lot of things working in their favor.
Like what?
Well, their recent performance, for one thing, and the overall trend toward electric vehicles.
But keeping up this pace of growth is tough.
It's a whole other ballgame.
So do you think they can pull it off?
It's hard to say for sure. But what I find really interesting about NIO is that they're not just competing with other EV makers.
It's bigger than that.
Yeah, they're challenging the whole idea of what a car is.
How so?
They're not just trying to sell you a car, they're selling a vision of the future.
Okay, I like where this is going. Tell me more.
They're selling a future where transportation is sustainable, intelligent, and seamlessly connected to our lives.
So it's about more than just getting from point A to point B.
Exactly. It's about appealing to our desire for a cleaner planet
For the latest tech.
and for a driving experience that's more personalized.
So they're tapping into something bigger than just cars.
Right. And that vision is resonating, especially in China, where the government is pushing hard for electric vehicles.
But it's one thing to attract customers.
It's another thing to convince investors that this is a solid, long-term bet.
So what do they need to do to prove themselves?
They need to show consistent profits.
Not just one good quarter.
Right. They need to manage their growth carefully, and they need to navigate this competitive landscape.
Which is only getting more crowded.
There's a lot to juggle, but they've shown that they can adapt.
And that they can overcome challenges.
And let's not forget, the EV market is still young.
And there's a lot of room for growth.
And NIO has the potential to capture a significant chunk of that market.
So what's the bottom line for our listeners?
I'd say NIO is a company to watch closely,
They're a fascinating case study in innovation and disruption.
but their future is still uncertain.
There are no guarantees in the business world.
But NIO's journey is a reminder that the only constant is change.
The companies that can adapt, innovate, and persevere are the ones that succeed in the long run.
I think that's a great takeaway.
So as you go about your day, think about this.
What other industries are ripe for disruption?
What companies are pushing the boundaries, and how will these changes shape the world?
Keep exploring, keep learning, and keep asking questions.
That's what the deep dive is all about.
Thanks for joining us.
Until next time, stay curious.